CNBC, meantime, out with a new Fed survey showing that although respondents raised their outlook for the S&P next year, there is growing concern around stocks being overpriced for a soft landing scenario. Our Steve Liesman's here to explain. Hey, Steve.
Hey, Carl, yeah, you got that right. Respondents to the CNBC Fed survey see stocks as the most overpriced they've been in at least the past 17 months. 69% of our 27 respondents say stocks are at least somewhat overpriced relative to the outlook for the soft landing, which we've achieved already. That's up from 64 in November. 27% saying equities are correctly priced. Just 4% see them as cheap right now. Strategist Subodh Kumar writing in, quote, compared to sustained 7% annual long-term earnings growth, current markets appear to be assuming twice as much. For the S&P 500, operating margins peaked in mid-2021, are in decline, and tariffs add to pressure. The average of our respondents pegged the S&P rising about 3% from the current level to 62.57 in 2025 and up by a total of 7% by 2026 to 64.89. This group is typically very pessimistic on stocks. Not necessarily on the economy. 68% say, hey, we're here. This is the soft landing. 29% is the probability of a recession in the next 12 months. That is the lowest level in at least 2 years. That reflects a better economic outlook, although inflation forecasts creeping higher. Unemployment forecasts, they've inched down a little bit, but GDP forecasts are inching higher. 2.5% is the number for this year, with probably a strong fourth quarter north of 3%. That's up a tick. 2025, 2.1, that's up 3 ticks from the prior survey. And 2026, that's new in the survey, 2.1%. Both of those next 2 years, a little bit above trend. Continued high inflation, that's the number one threat to the expansion. Global economic weakness, almost on the other side, that's the second one. The administration's fiscal plans, that's 3. And people wrote in, by the way, the tariffs specifically in that regard in terms of the threat to the expansion, followed by the size of the deficit. As for the Fed, a cut is expected tomorrow. Just 2 more quarter points are built in. That's 1 fewer than in the last survey for 2025. Fed seen reducing rates towards neutral by 2026, guys.